Or okay, so this is my clip number 3 for the chapter 5 on balance of payments. The last the third account, the third big construct, if you like, is the official reserves account. It's also called the official settlements account. And basically what's going on here is now the central bank is now getting involved in this whole grand scheme of things. And basically the definition of these sort of transactions is that these transactions reflect the financing of the balance on the remainder of the accounts. So in other words, we're first looking at the current and the capital, and if those two don't wash out and go to zero, then we have to have this sort of third account, this central bank intervention to kind of make sure that eventually everything does go to this grand balance of zero, so that the balance of payments balances. And why is all of this important? Is that basically what's going on here is these official reserves, what they represent is to some extent gold. These are all assets of the central bank, okay? So these are all assets of the Bank of Canada, in our case. But the main thing that they own is foreign exchange, okay? What that means is, what the term foreign exchange means is just the foreign currency or claims on it. So in other words, in Canada's sense, it would be like something like the Bank of Canada holds in a reserve somewhere a bunch of US dollars. That's the foreign exchange. And it could also be other currencies as well. Probably ones that are very important to Canada when it comes to international trade. So if we do a lot of trade, let's say with the United States, and we do, then we should probably hold a lot of US dollars. And we might have some euros as well, and Japanese yen, maybe some British pounds as well. And then in countries that we really don't deal with very much, well, we probably don't have any reserves for those countries. It just doesn't make any sense for us to do that. And there could be other things as well. There's this other thing called the special drawing rights as well as another possible asset that the central bank could hold in reserves. But the main one that we're worried about is this foreign exchange, this sort of stockpile of US dollars, euros, pounds, other countries' currencies. Now from a central bank's perspective, as I said, foreign exchange is an asset. So you see, a central bank, let's say, for example, is interested in manipulating exchange rates, which is a topic that I will have to talk about because your textbook also talks about it as well. And there is this distinction between sort of a floating exchange rate versus a fixed exchange rate. When you start talking about fixed exchange rates and manipulation in exchange rate, as opposed to just letting the market decide freely, now you're talking central bank interventions. This is sort of how do they do it. And ultimately what this comes down to is nothing more than like supply and demand, really. It's just buying assets or selling assets, right? So central banks can buy foreign exchange. In other words, in our case, it'd be buying US dollars, buying British pounds, buying euros, or it can take some of those stockpiles, its reserves, and sell them. Okay? And this buying and selling of foreign exchange is ultimately how exchange rates get manipulated. Because all an exchange rate really is just the price of foreign exchange. So for instance, when you see an exchange rate that says you have to pay, let's say, $1.10 Canadian to buy $1 US, it's the price to buy 1 unit of foreign currency, a foreign exchange. That's all an exchange rate is. It's the price to buy a unit of foreign currency. So it's just like saying, if you want to go out and buy a liter of cola or pop, right, or the cost of buying a liter of gasoline, it's the same idea, except in this case it's 1 unit of foreign currency. And so that's basically why we have this official reserve. It serves a whole bunch of purposes. It helps make sure that the balance of payments balances. And it's also a tool that can be used by the central bank to manipulate the exchange rate. So if it wants to prevent the dollar from depreciating too much or from appreciating too much, then it can use this account as sort of its tool to influence the exchange rates. So that's pretty much the gist of it. There's actually a lot more stuff going on here, and as you can see, there's a lot of relationships between sort of balance of payments and exchange rates and supply and demand. It all kind of comes together. So it's an exciting topic. But it also has a lot of real-world applications, and so in the future, I would like to come back to this topic. The reason why is if you've been reading the financial news, one of the big pressing topics right now is, of course, the very large trade deficits the United States has, and big issues about how the United States basically has to have everyone from the outside of the world financing it all the time, all these capital inflows. Okay. And of course China accumulating lots of US dollars and these types of issues. So this has become a really big sort of geopolitical question. Is can the United States continuously have trade deficits like this forever? What does all of this mean with having the United States having to import so much capital, and sort of the implications, not just for the United States and in China and the other big sort of players in all of this, but also the whole global economy as well. Okay, because this can get even more complicated. As opposed to just looking at two countries, sort of a bilateral case, you could also go to the next step, which is multilateral trade, right? Because Canada doesn't just trade with the United States. You can trade with multiple countries, and so this can get a little bit more complicated. So I do want to visit this topic again, but in the future. But I think I've covered enough at this point. Just to summarize, current account is where we measure receipts and payments pertaining to trade and income earned on owning assets, foreign assets. Capital account refers to this idea of buying assets or selling assets basically to foreigners. So this is like the case of a Canadian buying a foreign company, or a Canadian selling their domestic assets to foreigners. Okay, just keep in mind this is always involving something to do with foreigners. These are all everything in balance of payments has some sort of international implication to it, pretty much. And then the third account is the official settlements or official financing account, which looks at how the central bank is basically either buying or selling this foreign exchange, which is, in other words, key foreign currencies that the bank wants to either own or sell. And that basically wraps up this sort of very basic, simple overview of the balance of payments. All right.